So the agenda for the day is fairly simple. We talk a little bit about about the organization and our history and why we do. And I think it's very important for you guys to know as an international student that why we do what we do, because I think it will establish a good connect with the organization as well, and you'll actually understand that MPOWER Financing really stands to help international students. And then we'll dive into a bit of a details about the MPOWER loan. How does it work? What are the various rate of interest? How can an international student avail an MPOWER loan, and how can they start the process, right? So, well, to start off, we need to go back to when we were formed. It was 2014, and we were, started by these two gentlemen, Manu and Mike. They were former international students themselves, and they realized that education financing in the US is at that for international students is largely primitive, and it's not student focused at all. Something that it should be. I mean, and the kind of amount the student borrows and the student needs to complete their education, it's really pretty hard for their families to support them in this journey. And a new process had to be created in order to help these students out with their potential, which can actually assess how are they going to fare by the end of 2 years, or whatever the end of the program is. And that's exactly why we created MPOWER Financing. It's been 7 years since then. We have received multiple recognitions, accolades. We have grown about 3 times every year on year, and that's something that we're really proud of, to be honest. But what has not changed in these last 7 years is the mission to make sure that financial aspirations should not be dependent on, like, should be fulfilled and should be independent of the social economic mobility. At the same time, the high performing global citizens should not be deprived of their dreams. That's exactly what we wanted to achieve, and that's exactly what we try to do every day going forward. And we hope to make sure that keep on doing that. And how do we do that? With a fairly diverse team that we have built, which consists of about 30 nationalities. We speak about 20 languages, and a lot of us are actually former international students, ourselves, because we understand the journey, we understand the problem, and it's just that more hands are always required. It's such a huge segment. It's such a huge, how do I put it, like problem statement that it needs to be solved by as many people required, right? So a lot of international students actually join us because they have faced the problem themselves, and they want to make sure that they create an impact in this segment, in this field, and so that the future international students do not really face these problems. And through this team, we actually were able to achieve such great numbers as well. We work with about 350 plus top universities in the US. We land in about in 50 states of the US and 4 provinces in Canada. We have processed about more than 1 billion applications, in like more than $1 billion in loan applications up to date. And there is no country in the world that we do not support. So like I mentioned over there, there are 200 plus countries that we very happy to process applications for. And we were recognized by US News and NerdWallet. For those of you who are in this, and I hope that most of you are looking to go to the US, you will understand how big of an achievement was getting recognized by US News was, and something that I'm really proud of. And I personally like to talk about it as much as possible, because that's really about the kind of hard work that we do and how much we care about the international students. And that's exactly what we achieved. Best student loan for international students, something that really says, hey, this is what we want to do, and see, this is what we actually are, and we're doing really good over there. We talked a little bit about the history of MPOWER Financing and the why we do what we do, but let's move on to the what we do part, right? It simply talks about what is an MPOWER loan and how does it help, right? And before I dive into the whole loan details and everything that comes with it, I would like to talk a little bit about the funding challenge that the students face normally in this journey. Well, the most obvious and the most straightforward answer to their funding problem is the home country lenders. But in our experience, we have seen that these traditional banks and lenders require a cosigner or a collateral, maybe a property that they know the borrower needs to put up for mortgage, and it requires significant paperwork as well. Something that not everybody can actually go ahead with. Not everybody has an eligible cosigner or a collateral, or is ready to go through all that hassle. And then comes, there are US banks, US lenders. If you go into the US, that's exactly how it works. But they require a cosigner which is based in the US. Again, a solution which is not applicable to a lot of the students. And something that, we recognize that not everybody can have a US based cosigner. It's pretty rare, right? I mean, everybody wants to go to the US, but this is a problem that not everybody can actually circumvent. And that's exactly why we created a product to be able to help students which do not require cosigners. We are the only US based lender who actually support international students without cosigners. So something very unique about us. And as a US based lender, it creates a bit of a leverage too for a lot of stability, for a lot of credibility when you talk about your funding options. And at the same time, I understand a lot of you might have a cosigner or a collateral, and this is something I'll talk a little bit more as the session progress as well. But wouldn't it be awesome that you apply for a funding option that really does not require a cosigner or a collateral? I mean, that's exactly how an international student dreams and wants to go ahead with this journey. That hey, I should be the one. I'm the one who's going to study in the US. I should be the one who should be responsible to repay the loan, not my parents. And that's exactly what we think it should be, and that's exactly why we have created this product, right? And diving into a little bit of that, and like I said, the product is fairly suitable to a 21st century international student, which means that we do not require a cosigner, collateral, or a credit history. We understand that a lot of you are just starting your career and might not have a credit history. So we don't really base our decision on that. I mean, if you have one, we'll be happy to look into that. But if you don't, we don't really require a credit history to fund fund you for your education. Something very unique about our loan product is that we offer fixed rate interest, which means that no fluctuations has to be borne by the student. And we'll talk a little bit about this in the next few slides as well. And when I say fixed rate, so it's the logic dictates that the interest rate would never increase. But I never said anything about the decreasing of interest rate as well, which is why we offer some interest rate discounts to our students, for on the basis of regular payments and on the graduation and employment, something that it's all the users, all the students are fairly eligible to apply towards. And we'll talk a little bit about them too, because I feel that this is something that a lot of you who are interested in empowerment should be knowing about before you start the process. We offer a 10-year term for the repayment of the loan and a maximum of $50,000 in the loan amount. And we can cover any expenses that the school has invoiced you for, which includes tuition, housing, meals, library fee, computer fee, enrollment fee, graduation fee, anything that the school wants to invoice you for. It's fairly inclusive in the loan product. A disbursement process is a school based, which means that we get in touch with your school and understand the fee schedule and then keep on disbursing the amount to them. What happens in doing that is that you avoid any sort of an administrative hassle at your end. You don't really have to worry about the foreign transaction charges that when you get a loan in your home currency and then you convert it into US dollars and send across, you will incur certain charges no matter where you are in the world. And what Empower does through this process is help you save that money too. And since you're a US based lender, we help build a credit history. It is fairly important for those of you who are new to this concept and might not know. Let me tell you that a US credit history is very important to avail a lot of services in the US too. You want to rent a house, they would want to run your credit history. If you don't, you might be required to pay a higher deposit. Or at times we have seen even a potential employer wants to run a credit history of student before offering an employment to them. So credit history is fairly handy, and it's important that a international student who's looking to study and then work for the duration of their OPT, wants to avail the services should have. And this was my, the next one is my favorite, the visa support letters. Which is very important for an international student to help with their I-20 process as well as with their visa process. We offer free visa support letters, which means that any student who gets a loan approval from us gets a free visa support letter, which you can use through, for your immigration purposes. And if you look at the entire, points that I've just mentioned, you'll see that I haven't mentioned anything that you have to pay upfront, right? So what I mean to say here is that the loan application process is free of cost. So what I could urge you is that, no matter if you end up taking a loan from MPOWER or not, a loan without collateral or cosigner is always the best thing to have. And since the process is free, I encourage you all to apply. I'm not I'm not trying to convince you to take the loan from MPOWER, but in my opinion, as as someone who has been in the space, I definitely think that a loan which does not require your parents to come on the loan application as well, for you to put up any sort of a property or an asset of a mortgage, is always the best thing, right? And lastly, we do not charge any sort of a penalty or a prepayment charge, like a fees that student has to pay to close the loan early. It's up to the student whenever they want to close the loan. They take the loan from us, they want to do it the next 3-4 months. It's all right with us, to be honest. We do not incur any prepayment penalty to the student. And let's dive a little bit more into the details of the loan product, which talks about the interest rate as well as the interest rate discounts and the whole nitty-gritties of the Empower loan. So for those of you who are looking for graduate education, we offer a 11.99% as a fixed rate of interest, and with an interest rate discount of 1.5%, which you can see as the third point, that rate of interest comes down to 10.49%. For those of you who might be looking for an undergraduate education here, we offer a rate of interest of 13.99%, which is again, I mentioned, a fixed rate of interest, and subtracting the 1.5% of interest rate discount, that comes down to 12.49%, right? We charge an origination fee of 5%. Now, when I say origination fee, it does not mean that this is an upfront cost. This is something that's added to the loan amount. And again, you do not pay anything to Empower until the disbursement happens. So until you agree for a disbursement and then we go ahead and disburse to the school, you do not pay anything. A loan amount ranges from $2,000, $2,001 to $50,000, which means that your loan amount could be anywhere between this range, and we offer $25,000 up to $25,000 for an academic term. What I mean by an academic term is it's fairly for a student to interpret. It could be a semester, it could be a trimester, it could be a year two. So it's up to the student. So they can take a $25,000 loan for the 2 semesters of their first year. They can take $25,000 loan for the first year and $25,000 loan for the second year, and so on and so forth. So it's totally up to the student to interpret this the word academic term. But like I said, it could be anything. Could be semester, trimester, or even a year. The repayment process starts 45 days after disbursement, and it only is the interest only payments, which means that for during the school period, the student pays only the interest on the loan amount. And you know what, we'll talk a little bit about that too, as to why it's a good option to always pay the interest during the school while you study. Why and how you can save a decent amount of money by doing this. And in the next few slides, we'll definitely discuss this too. And like I mentioned, that the principal repayment starts over 10 years, which means that, for example, your program is for 2 years, so you pay the interest for the first 2 years as well as for the next 6 months as a grace period, and then after 30 months, you start with a 10-year period of repayment of the rest, the principal amount. That's exactly how you do. So the overall duration of the loan interest, the maximum duration becomes 12.5 years, right? Now moving on to a bit of the discount process as to how the discount interest rate discounts work. We offer three interest rate discounts of 0.5% each, and they're fairly simple to avail, very straightforward, no hidden condition or policies there. You take a loan from us, and in order to repay the loan, you apply for an auto pay feature for the bank account, which means that the money every month will be deducted automatically from the bank account. You just need to make sure that you maintain the certain bit of a balance from which the loan amount, the interest amount can be deducted, and you sign up for that, and you let us know that you have done it. We offer a 0.5% discount straight away. You make 6 timely payments. You're using that auto pay feature. We offer you another 0.5% discount. So within 6 months, your interest rate drops by 1%. The last interest rate is when you graduate and you get a full-time employment and you submit a proof to us. We give you another 0.5% discount. So, I mean, if you look at it, these interest rate discounts are offered just to be a good borrower, just to be a good student. So if you fulfill your academic aspirations and be a nice borrower, which most of us want to, because, well, it would affect your credit history in the US. So once you do that, you get a 1.5% discount right away, and before you even start repaying your principal amount, your interest rate has already dropped by 1.5%, which is for me is a huge a discount, which in my opinion no other lender actually offers this much discount for international students, right? Now let's talk a little bit about, we discussed that you need to make sure that you need to pay interest only payments during the course, and let's talk about how can a student save some money on that. I think it's really important to understand why you should consider paying that, because and if there is any sort of an advantage in doing it, to be honest. So imagine there are two loans, right, of $21,000 each. One loan requires you to make interest-only payments. The other loan does not require you to make interest-only payments. But the interest will always accrue. The interest will always be incurred. So anyone who tells you otherwise either has a very awesome loan product that nobody has heard up till now, or is lying to you. If you are not making any payments after taking a disbursement, we haven't heard about that at all. Now the process, in my experience, in 100% of the cases goes that even if you opt to not pay, the interest always gets added up. So imagine, for the sake of argument, that the interest rate is about 12% per annum, right? For the sake of argument and calculation, let's do that. So when a student takes a loan of $21,000, the monthly interest becomes $210, right? Whereas in the other loan, the interest payment is $210, but he's not paying anything. So what happens to that amount? It gets added up every month. It gets added to the loan amount, to the original principal amount. So by the time you graduate, a borrower with an MPOWER loan graduates with the same principal amount that he would originally opted for. But the person with the other loan starts with a much higher principal amount, which means that it's somewhere around $26,000 to $46,000. Now, when the repayment for principal amount starts, for an MPOWER loan, the interest would still be on $21,000, which comes out to be somewhere around $300. But for the other loan, now since the principal amount is higher, the overall payment is higher too. And over the period of 10 years, you pay for an MPOWER loan, you pay about $21,000, $386 extra. And for other loan, for a competitor loan, let's say, which does not allow you, which does not let you to pay anything during the course period, you end up paying $25,000, $168 extra. Just right there is about $4,000 difference, and that's something that's a huge amount for international students. even to start off with a higher principal amount does not make sense, because now you're making more payments, even if you don't look this into account, because this would be at, like, after a 10 period financing charges, you're still paying extra month on month, which again does not make sense. For the rest of the loan tenure, you are always going to be paying higher amount, higher EMI, and that's exactly how you end up saving money for for the rest of your loan tenure, for the rest of the duration of the loan, right? And and now we discuss a little bit about we talked about the interest rate discounts, we talked about the interest, like the interest only payments, and let's talk about the next best thing that I really like is the fixed interest rates, and why we should love fixed rates. Why every international student should love fixed rate is primarily because, one, the risk burden is on the lender, which means that any market fluctuation, any recession, any market meltdown that happens globally, the borrower is safe, because they they received a fixed rate of interest, and any risk that happens will be absorbed by MPOWER. It would never be passed down to the borrower. Whereas in a variable rate of interest, that's exactly what happens. Any risk that the lender will incur will be passed down to the borrower, no questions asked, and your interest rate will fluctuate based on uh, the market conditions, right? Thank you so much. And with that, goodbye. Have a nice day, everyone. And we hope that in some or the other way, we are able to help you in this journey.